Hello, it's Al Mora, your host of the Get MorAlpha Show, once again, and at last, after 33 days after my first show on February 10th, I'm going to go over the main topic of this whole series, which is to get people aware of what is going on in the world of online investment platforms. So we're finally there. Before we get into that, every show I've had stuff to do just before, and we have that yet again. We're going to do a market update. I always do this. There is a scientist named Leonard Susskind. He is a favorite of mine. He is an amazing professor. I love to try to learn about science. I watch his lectures. I recommend him. He covers quantum physics. He covers cosmology. He covers the hologram theory. He is an amazing physicist, and he's closely associated with Juan Maldacena of, I believe, Colombia. And I'm so proud of myself because I remembered their names today. I've been meaning to mention them in prior shows. Okay, point being, I do what Leonard does. Professor Susskind will start on something, and then he'll say, wait a minute, hold on, back up. Okay, so here it is. Backing up, and I want to just mention how happy I am that it's working. This camera is working. This is my new camera. Getting to just the technical side of streaming down has been a learning experience for me. This is my 6th or 7th show, depending on how you're counting, and the last few shows were a disaster. The last 3 shows, everything that could go wrong went wrong, almost. No, the roof didn't fall in on me, so. And nothing blew up here in the room. However, it was a challenge. And if you were watching, you saw there was a lot of blinkiness and blurriness that I think is gone now because I went Ethernet. No more wireless. I have a 100-foot wire that I tacked to the walls today. So I'm directly to the router today, and that's helping. And then right when I got that solved, I had a camera completely fail. Like a camera in a box here that it's on timeout. It's in the timeout box because I just can't get it to work right. So I might return it. So here it is. I'm happy that we're finally getting into this and that that it's working. This is not a normal time for the Get MorAlpha show. The technical issues that came up have caused my scheduling to get a little haywire. So here I am on a Saturday night. No one's going to watch me on a Saturday night. You have better stuff to do. Even now that you're staying home because of coronavirus, you have better stuff to do than watch me on a Saturday night. But I'm doing the show now to get ready for Monday because I don't want to get behind schedule. Now, I said schedule, Bing, magic word for the day, schedule. I'm going to change the schedule, I think. I've got a schedule out there on the website, a schedule I've showed on prior shows, and the same general set of topics will still be there. They're all topics that if you've been looking forward to them at all, and I hope you have been, they're going to be there. But now that I'm into the show and I'm learning as I go, naturally, I have the great luxury of being completely flexible. I get to do what I want, come on the air when I like, and change the schedule, and I will do that. Now, speaking of coming on the air when I like, I think I'm going to start scheduling 2 shows a week, but I might start even doing some morning shows because early morning shows, and I mean 6, 7 in the morning, California time, could be a good time to do a show because that's when the market's really getting going. And people have been calling me a lot, and I've had some emails, and I have had some breakfasts, some coffees, and some visits with people because they're really concerned about what's going on in the market, and they want to hear from someone they know as opposed to just what's on TV. And there are great shows on TV, and I recommend the shows that are on TV. So when I go on the air, I'll be right up against the guys on Squawk Box. 2 of my favorite guys, Madman Kramer, I think is that his name? Careful with me in names and memory. Kramer and Carl Quintanilla. They are great on CNBC. And Fox Business News, they do business news, also does a great job covering the markets early morning. Okay. So anyway, so there it is. There's a little bit of that. Now we'll go into what we always do here, our roadmap. And now I will check my monitor, make sure I'm on the air. And let's see what I have here. My monitor says let me get it caught up. Pardon the again, more technical stuff I'm dealing with, but I want to make sure it's all working. I think it is. There it is. Yes. Okay. I've got sound there. Everything's working. Now I can go to full screen. So let's go to the correct screen. I, in the past, have done things like thought that I had a screen up when there wasn't a screen up. I've sat here for 45 minutes talking, thinking you could see my presentation, and you could not. So I'm slowing down, making sure I know where I'm going. Okay, it's time to go to the actual presentation. There it is. Time to go full screen. I will check my monitor. Last time I actually did a show without a monitor, and I paid the price. I'll never do that again. I thought, oh, heck, it always works. I never use the monitor. And what happened? I was on without any slides, talking and talking. Goodness gracious. So I had to delete that video. Here I go. Investment service providers and online platforms, finally. Here's our roadmap that I always put up for us. We're going to review investment types yet again. If you're watching the show for the first time, I've done this over and over, and I'm going to keep doing it because I want people to know what I'm talking about when I'm talking about investment types. And I don't assume you know. And then we'll go into investment service providers and online platforms. And there's a bonus. This might get long because these shows get long when I throw the bonuses in there, but it's an asset class comparison. Now, in the past, I did an asset class comparison where I looked at returns and volatility. But today I have returns, volatility, beta, and alpha. That's big. That's a lot. And before any of that, I'm Leonard Susskind, inspired by him. I'm going to, I'm missing a slide. Let me look back at my presentation. I am missing a slide that I just had here. And that slide, there it is. Okay. Now I know where we are. Okay, good. We really are at the beginning here. Oh, okay. I'll get used to this. Here I go. So before starting, my plan is to do this before every show. I nearly didn't do it, but here I am. I'm doing it. I am not a broker, investment advisor, financial planner, investment manager, hedge fund, or investment bank. I do not make explicit investment recommendations. Please consult with an investment professional you trust before making any investment decisions. Don't just do what it looks like I'm recommending, please. The number one goal of mine, fundamentally underneath everything, is for you to learn enough to make your own decisions, to not even have to take my advice, for you to know enough to where you can make sensible decisions. Believe me, you can. Believe me when I tell you, you can. If you put in just enough effort to learn what I teach in this show, you will be able to make far, I can't say far better because perhaps you're already there, but I would say watch the shows. Many of you will learn a lot. Some of you already know a lot of this, and you'll learn some more. Those of you who are at the basics will learn a lot. And I have faith in this. The more you watch this show, the more sensibly you can make investment decisions. And when things go your way, great. That'll be because you knew what you were doing. But when things don't go your way, you'll know why. You won't get caught not knowing why things did not go the way you wish. Because if you are an investor, you are taking risk. And not everything I'm teaching here is very risky. There's a lot of stuff here where you can learn that you don't want to take risks. You don't want to be really an investor. You may just want to be a saver. But why not know why you've decided not to invest, right? That's what you can learn in this show. Okay. So I'm unaffiliated and independent. I work for you. My success is based on how well I teach. I believe in knowledge and everything in life. I'm essentially an amateur, very amateur philosopher who believes knowledge is the key to everything, anything in life that we really dream for, that we strive for, that we wish for ourselves and for everyone around us. I don't just teach one investment approach. I'm not here to teach you how to get rich quick, but the things you can learn if you watch the show quarter by quarter, you'll learn how to short, you'll learn how to trade futures, you'll learn how to trade options. And if you want to be a day trader and take a lot of risk, you can take as much risk in one day as a normal investor takes in a year, or you can take that much risk in an hour. I'll teach you to do that. On the other extreme, I'll teach you, if you wish to not even play with any of this stuff, I'll teach you who to go to manage your investments, and you will know why you went to them. That's really at the heart of today's shows. So what do I teach? Things like long-term hold, optimal portfolio, active trading, day trading, options, derivatives, shorting, trend trading, correlation trading, arbitrage trading, event trading, macroeconomic, automated, algorithmic. I discuss all of that stuff. I will discuss all of that stuff through over time. And each quarter, again, I'll have a cycle. Each quarter will start out basic. Each quarter will end with advanced concepts, and I'll just keep doing it. And then obviously each quarter they'll be a bit different as I get used to the show, and as I believe that I've brought my audience along with me. And as you're learning, we can skip some of the very, very basics in the second time around, the second quarter, and get in a little deeper into things. All right. Here is a market update. This is a slide you've been seeing if you've been watching the show. The S&P 500 price earnings ratio is a ratio that takes the value of the whole S&P 500 index. That is an index that tracks the values of 500 large public corporations in the United States, and it divides their value by how much they have earned in the past year. Because there is a reasonable proportion in this world between what a company is worth, what its stock is worth, and how much it makes. A company, I've said this over and over, if a company made $1 million last year, but the stocks are trading for a penny and they made $1 million per share, stocks are trading for a penny, buy. Because that's preposterous that you could buy an investment for 1 penny that's making $1 million a year, because that's not a reasonable proportion. Let's turn that around. If a stock has made only a penny in the last year and it's selling for $1 million today, what are you doing? If you're thinking of buying it, you better know what you're doing, because that doesn't sound reasonable. Here's what is reasonable right in front of us on this chart. If you look at the green bar, that's the average. The average from 1927 to 2019 at year end, plus March up to March 12th, which was Friday, the average was a price earnings ratio of 17 times, the green bar. How many times did it happen? It happened 6 times. And that's the average. That implies growth, earnings growth. Okay. The average green bar, let's stay on the green bar, implies earnings growth of 4% per year. I did the algebra in a prior show that shows how you can back into the implied earnings growth from any price earnings ratio. But when we take away inflation of around 2%, we really are talking about a reasonable earnings growth expectation of 2% per year. This is expected earnings growth forever for a stock. Okay. Now, that's the average. So we see the average pop up on the top right of the screen. Pre-coronavirus, we were at virtually all-time highs. We have only been higher than that. Price earnings ratio has only been higher than that 2, 4, 6, 7 times than where it was pre-coronavirus. And this is why I created this slide. I devoted my entire second show to warning people, look where we are. It's very high. There is a much greater probability we will fall than that we'll rise or stay flat. Now, coronavirus greatly accelerated the drop. But those of you who saw the show saw that and you can go back and watch that first episode. It's called Blast Off, right on this same channel. And you can see where I talk about the fact that that was too high. Today, we're in red here. Let's look at the red bar. Today, we are at the end of Friday. The PE ratio closed at a 20 level, 20 times. So the price of the average stock on the S&P 500 index, in the S&P 500 index, cost $20 for every dollar it earned in the past year. So those stocks that earned $1 on average cost $20 to buy. That's still above the average. The average was 17 and we're at 20, but it's not crazy above the average, like $25 per dollar. $20 is more in a possibly sustainable range. Anyway, okay, here we go. 20 times today implies 3% real growth, okay? Conclusions then. We're at a possible sustainable level, maybe through artificial intelligence and just all of us becoming more skillful and more educated and putting in more energy to our work, becoming just better at everything we do. Maybe we can sustain it 20 times. Maybe 17 times is of the past. And that's plausible. Okay. However, coronavirus could be could knock us way down, not only to the average, but below the average. So now you've been watching the market, it's been falling, and you may be thinking, oh, heck, it can't fall anymore. Excuse me. Boy, I'm glad I brought coffee this time. I'll have coffee every show from now on. That's the last thing I did. I heated that cup of coffee. Okay. Those of you wondering if it could go down more, there it is. Here's the chart to look at. Yes, it can go down more. First of all, it can always go down more because the market breaks records either way, down and up. But secondly, it has been below this many times in the past when we look at the bars. In fact, it's been below 20 times more, way more than it's been above 20 times. Okay. So yes, it could go down, and coronavirus could push it down. Now, here are what I call portfolio decision implications. What does this mean if you're holding a portfolio or considering building a portfolio? And let's say you're a risk neutral investor. We're going to look at two kinds of investors, risk neutral, excuse me, or risk, what do I call it? Risk averse. Risk neutral investor, sell some stocks, maybe sell a lot of stocks, sell some bonds, especially long-term bonds. Long-term bonds rallied. Long-term treasury bonds rallied a lot, but long-term corporate bonds could be in big trouble, especially in the energy sector, because the energy industry is one where, because there are lots of physical assets, people borrow a lot of money in that industry. They're very what's called levered. And their bonds, they issue a lot of bonds, and they issue lots of what they call high-yield bonds, junk bonds. I don't call them junk bonds. I call them high-yield bonds, non-investment grade bonds. And those bonds are already being hit, and they could really continue getting hit very, very hard. Okay, buying short-term treasuries is safe. If you bought long-term treasuries up to now, you did well. While the market crashed, long-term treasuries rallied and did very well. Big why? People buy U.S. treasuries when there's a lot of risk. It's a flight to safety. It's called a flight to safety. Where do people fly to? And then this is investors from all over the world. They fly to U.S. Treasury bonds. Increase your cash. If you're a risk-averse investor, you want to be careful. Sell most or all your stocks and bonds. Hold cash. Re-enter after a sharp fall. Okay, we've done our market update, and let's get back to our roadmap. Again, now we get into investment type review, investment service providers, online platforms. We're going to get into our bonus. If you hang with me, investment types. This is a review. This is the third time I go through this. We're going to start from safer investments to riskier investments. And for each investment, I have columns that I will not go through every column today because I've done it in the past. Plus, you can freeze this page later if you want to come back and look at it. Okay? Here we go. The idea, though, is that on the left, we will see the name of the instrument, and way on the right, we will see how risky it is. And we'll get a flavor for the average return way toward the right with a few other extra comments. Another important reason for going over investment types is because when you go into investment service providers, some of the investment types are investment service providers. So there's a strong overlap between knowing investment types and knowing the main topic of today, which is investment service providers. You may know a lot about a lot of these, and you may think you know more than you know, and you may know very little. Here we go. Investment types. The safest investment type always will be cash. And this is really cash in a bank. If you think cash under your pillow is safer or under your mattress, you could be wrong. Why? Because you could have a fire, right? Or you could expire. None of us will live forever, and people might not know where your money is if you've hidden it somewhere. So cash in an institution is the safest place for money. Let's face it. That's why so much more money is there than under pillows and in holes in backyards. I think there was a time when there was a lot of that. Well, there's no doubt there was. Okay. All right, but people also consider certificates of deposit and money market funds cash, and they should, because those are so extremely safe. Certificates of deposit, those are just investments you buy from your own bank. I'm going to say virtually every, if not every bank offers them, but you can go online and get better rates very often than from your own bank. So it's going online, Google it, and you may find better rates than your bank is offering. Money market funds means you would be buying a mutual fund or an ETF. It's one of the investment types. Those are two of the investment types coming up. But if they buy money market funds, then you are buying money market funds indirectly. You wouldn't buy them directly. What are money market funds typically? It's commercial paper issued by gigantic entities like massive, like banks and massive corporations. They issue overnight loans, and literally they borrow money overnight or for a week, for a month, for 3 months. It's very short term paper, it's called, and they're very safe. So let's go all the way to the right. What is the average return? 0 to 2%, which in other words is just basically paying you back for taking inflation risk. That's really what they're doing. And the risk, we consider that zero risk. Bonds. A bond is a transferable loan. You won't typically buy a bond directly. Again, you would be buying a bond through mutual funds or ETFs. Let's go all the way to the right. What do they earn? Between 2 and 7%, depending on who's issuing them. If the U.S. federal government's issuing them right now, the federal government can borrow a 30-year, and they recently have borrowed 30. They have issued bonds that mature in 30 years, paying only 2% interest, more or less, historical lows. And those bonds are yielding even less than that because they've rallied, as I mentioned earlier. Anyway, so you make somewhere between 2 and 7% on bonds. It's a range. It can be wider than that depending on what kind of bonds, but that's kind of the range. And the risk level is 0 to 3. And bonds are issued by governments, from federal government to state to county to sewage projects to your city, municipal bonds. All right. And they're issued by corporations, and they're issued by international institutions like the World Bank. Relatively safe. Individual stocks, when you buy stock, you buy a piece of a company. And that is a perpetual investment, whereas other bonds and loans mature, but a cash account doesn't mature, and stock doesn't mature. And how risky are they? Look at that risk level, an 8. They are risky. Compared with everything else here, they're among the most risky things that you can buy. When you buy individual stocks, if you buy a diversified portfolio, you can cut your risk right in half. And it's costless. We'll get into that. But look at where your average return can be. You can lose 30%, or you can make 50%. You're in this range when you buy an individual stock. 2 out of 3 years. 1 out of 6 years, you lose more than 30%. So if you've had a portfolio, you've had this experience. And 1 out of 6 years, you make more than 50% with individual stocks. Okay, if you've done that. They swing wildly. Okay. Mutual fund shares, all you're doing is when you buy a mutual fund share, you buy a share and that fund goes out and diversifies you. And they may buy maybe something that represents the entire market, which is very safe, or certain subsectors of the market like high tech, or they may go international, or they may be domestic, or they may be half bonds and half the whole stock market, the market portfolio. And we'll talk about that. Okay, so the risk is way lower once you buy a diversified portfolio by buying mutual fund shares. Look at that risk column. It's a 4 instead of an 8 for an individual stock. And look at that average return range. For an individual stock, you can go below 30% 1 out of 6 times. Well, when you buy a diversified portfolio, you go below 5% or around 1 out of 6 times. But between negative 5% and plus 25%, you're in that range a lot, 2 out of 3 times. You're in that range. Or maybe negative 10 to 30%, you're in that range 2 out of 3 times with an average of about 10%. And your risk is a 4. By the way, this risk measure is one I made up. 0 means no risk, 10 means extremely risky, and we'll have a 10 on this chart. ETF shares are like mutual fund shares, but here are some differences worth knowing. Mutual fund shares have a price that's set every day, and you buy or sell them to the mutual fund at that price for a full day until they reset it at the end of the next day, not ETF shares. ETF shares trade all day long. You can buy them and sell them during the day. Also, mutual funds charge fees, and ETFs don't essentially charge fees, or their fees are just minuscule compared with mutual funds. So they're becoming more and more popular for that reason. Other than that, they're virtually identical to mutual fund shares. A hedge fund is a company. Hedge fund's a fund run by a small group of people, and they let you in if you're an accredited investor, meaning you're a wealthy investor. And they have, well, let's go all the way to the right, potentially very high return and consistently high return, and with not a ton of risk. A risk of 3 to 5, from 3 to 5, depending what they're working on, what kind of risk they're taking. And especially if you can get into a hedge fund that's been really successful for a long time, like the top 10 or 20 or 30 hedge funds, which have been remarkable in how successful they've been. Alternative ETF shares, remember I said there are ETF shares. Alternative ETF shares have something special. Hedge funds make a lot of money, and they charge a huge fee, I better emphasize. They make a lot of money because they use more volatile instruments than mutual funds and ETFs, normal ETFs. They can short, hedge funds can short, and so can alternative ETFs. And hedge funds can use derivatives, and so can alternative ETFs. So I'm going to look into those more. Those are relatively new, especially to me, and I will teach us more about that. Options are the right to buy or sell. Typically, people buy options on stocks, and they're risky, especially if you sell them. So look at the risk level, 7 to 10. And what is your average return? It's proportional to the risk you take if you know what you're doing. If you don't know what you're doing, if you don't know a lot about options, don't touch them. Futures I can give the same advice relating to futures. If you're not sure what they are, don't touch them. They move in price very fast. A futures contract is what you would be trading, is an agreement to buy or sell something in the future. If you buy the contract, you actually don't buy it. You're just in a position where if the price of the thing you're buying with the contract goes up, you'll make money. But if you sell a contract before you bought it, then you'll make money if the price of that asset goes down. So selling futures is shorting. Selling futures is very risky, but so is buying futures. They're very risky. Look at the risk level there at 10. And how much do you make in return? Proportional to your risk. You can make a lot of money, but you better know what you're doing. All right, so we've gone through investment types. Now we get to the topic that I have been working toward all this time. Okay, took a half an hour to get there, almost. Who are the investment service providers? The most well-known investment service providers are brokers. They've been doing it for the longest. They've been around for, over a century. But now we have their competitors, and their competitors are themselves, because these same brokers are the people who are creating the online platforms. But there is a huge difference between the service you're going to receive from your broker, who you call on the telephone to place orders, and you having your own online trading platform. And that's what we will learn on this slide. There are financial planners. They're called certified financial planners, and they are not somebody you call to make fill an order for you. A certified financial planner is somebody who goes deeply into facts about you, who interviews you, sits down with you, spends time with you, charges you a good fee that he deserves or she deserves, but will plan your entire financial life for you. And then you can go on and do anything. Once you've been with a financial planner, you might go to a broker, you might go to an online platform, you might go to an investment manager, or you might go to a hedge fund. But they do play a special role. We'll describe that role here. Okay? What services do all these people provide? This is what we're going to do. We're going to go row by row, and we're going to write down a service, and we're going to see who provides that service. And here's what we're going to work toward. Look at the bottom. We're going to work toward customer type, because really, if you're a highly independent person, but you're not a really techie person, and you don't want to go on, learn an online platform, then you want a broker. Okay? If you are very independent, and let me go back, if you're highly independent, this means you want to decide what you want to invest in. You want to call your broker and tell them what to buy and sell for you. If you're this person, but you are techie, you want an online platform. If you're a very dependent and very thorough person, you go to your financial planner first. And really, as long as you want somebody to really analyze you, whether or not you're techie, whether or not you're very dependent or independent, go to a financial planner if you don't mind spending some money. And I will tell you, the bigger your portfolio, the more valuable that they have, dollar for dollar, the more power, the more bang for your buck you're getting if you go to a financial planner. By the way, certified financial planners and brokers are licensed to do the work they do. So are investment managers. All right. And if you're a very dependent customer type, then go to an investment manager. If you don't want to make your own investment decisions, you want to follow their advice, go to them. But if you have a large portfolio and you're dependent, or maybe you can be very techy, but you want a professional hedge fund who hires the best programmers and best mathematicians in the world, and who has a massive fund with only accredited investors in there. You're a wealthy investor with a very large portfolio. Try to find a hedge fund, do some shopping. Email me if you have questions about that. All right, who fills or buys or sell orders efficiently? That's what brokers do. That is what they do. They don't do a whole lot more than that, but that's not bad, because they're serving that purpose. Online platforms can get you a better price. I'm going to make a long story short. Now the online platform can get you into the market. You can see real-time prices, and instead of you calling your broker and relying on your broker to get to sell your stocks at a price that you've told him you could sell them, by the time he hangs up, the world is moving. In the world of investments, it's changing. Instead of that, you can have your online platform on all day, and you can watch the market. You can decide, bam, to hit the button when you want to sell something, or you can set up an order that will sell your stock when it reaches, say, a target. Say you want to sell a stock when it hits $70, and it's at 50, 60, 70, 20, wherever it is. You can place that order, and boom, the moment the market hits that price, you will get filled with an online platform. So it extremely efficiently will fill your buy or sell orders. And investment managers will take your phone call, and they will not charge you a fee. Compared with brokers, that's their life. They'll charge you a fee. Your investment manager will charge you a percentage of your how much they're managing for you. That's what they'll charge you. And then if you start to ask them to do certain movements with your change your positions, they'll do it for you. They won't charge you commissions on those trades. But a hedge fund will ultra efficiently. Not only will they fill your buy or sell orders, they'll never take an order from you. They're the ones creating the buy and sell orders, and they are spectacular at getting the best price. They're probably the best in the world. They probably deserve 3 or 4 check marks because they have high-speed trading that is the quickest into the market, into all the markets in the world. And when they're buying something, they buy it as cheaply as anybody or more cheaply than anyone. And when they're selling, they sell at the highest price of anyone. It's one of the reasons that they succeed so much is their speed. Okay. Who provides investment advice? Brokers provide a little bit of moment-by-moment investment advice. They'll tell you if it's a good day to be in the market selling or not. You know, if there's a tremendous rally in the market, but you say you want to buy, they might say, no, don't buy today. Wait till the market drops. That sort of advice. Online platforms effectively give you a lot of advice because they have a huge amount of training. That's why they get credit for giving advice. Financial planners deserve 3 check marks here. However, they're not the moment-to-moment person you're buying, that you're calling when you're trying to place an order. They are going to go and look at your at a lot of information that's coming up on the line here, and then helping you make life decisions, broad investing decisions. Investment managers do give you advice. You go in there and you select more or less the portfolio that they're recommending, or you can ask them to be a little less or more aggressive, and they will follow your instructions. Who analyzes your assets? Next slide. Who analyzes your income, your taxes, your retirement? By the way, when I say assets, I mean who will look at how much jewelry you have. I mean, they'll take down all the information that you're willing to give them. To the extent you don't want to share things, you don't want to tell them because it's confidential, you won't. But to the extent you want them to know, you can tell them anything and everything. And they are very well trained for taking into account your age, your tax position, what kinds of assets you have. They're the kinds of people who help you get accounts that are offshore. They help you decide whether you want to bring money that's overseas back into the U.S. and help you find the tax efficient vehicle to do that. These are people that really can help you with broad-based issues, and they'll go to an accountant who can help them with tax rules. So these are very, very well-trained people at what they do, and that's why they are the only guys who get 2 checks on this line. Investment managers do some of that, but the financial planners are the stars of really analyzing what you've got going on and helping you, getting in depth with you. Now, who will completely manage your investments? Right there, an online platform. They have artificial intelligence and robo portfolio management. So if you're paying an investment manager to manage your investments and they do things every month to rebalance your portfolio, you can go online and it will. Some of the platforms have a set of interview questions, all automated, and based on those interview questions, they suggest portfolios to you, but in the end, you choose the portfolio, and it does the work of rebalancing, and the fee for this is 0. So now we have these. This is where we're in the middle. Actually, we're at the beginning of the investment revolution. This is when investing is going to become democratic truly. More and more people are going to become aware of this, and it's going to be something that from a young age, most people do. I predict this because it makes perfect sense. So once people have $1,000 or $2,000, they will open their account and they will learn to invest. And some people that are young will learn to get out there. They will be as good or better than any hedge fund in the world. These will be teenagers, these millennials, and those that come after the millennials, whatever they're going to be called. They're going to be amazing. That's what I predict. And so I'd like to get that moving as quickly as possible. So yes, let's open online platforms. Let's learn. And it can manage our investments, but also we can manage our own investments, right, with the online platform. We can completely manage our own investments, or we can have a robo manager within the platform. And investment managers completely manage our investments, and hedge funds do that. Who will provide reports and tax forms? Everybody will provide you reports and tax forms, but online platforms gets 2 checks because you can customize so many reports. So everybody gives you the same tax reports that you need to file taxes. But then on top of that, within an online platform, you'll see some screens later in the show, and they have an incredible variety of reports that you can create that come with the platforms and that you can add to or that you can modify. Investment managers and hedge funds will provide you your month-to-month report, and they will provide you any reports you request in the interim. They will sit down with you. They'll have meetings with you if you like. Investment managers and hedge funds, especially investment managers. And okay, next item. Who has data though? Filters, charts, analytics. Who has a customizable interface? Only online platforms. No one else has that. And that is powerful if you're somebody who wants to learn. Who educates you? Brokers educate you somewhat. They'll make you aware, for example, of a lot of investment classes. They'll teach you what it is to buy on margin. They'll teach you what it is to, spread your money out amongst different asset classes. You can learn a lot from them. Online platform, you can learn a huge amount from them. You can learn things not only about how to run the platform, that's something to know, but they have seminars and shows, and they have live streaming. They give you access to literally hundreds of things that you can access to learn whatever you may have a question about in investing. And you can just go online and Google everything nowadays as well. So financial planners certainly will educate you. Investment managers will do some of that. Hedge funds will not. Hedge funds are busy people, and they don't sit around teaching people what is a stock or what is a bond. Who profits in rising or falling markets? You can in an online platform, and if you're good at it, you can get 2 check marks here. But you can do that there. And you can't do that through a broker. A broker generally isn't going to be pointing you to risky stuff like selling options. And you may not be allowed to, because when you open an account, depending on your profile, they will decide whether or not they let you do riskier stuff. So, and they have to, and they should. So when you fill out an application and you first open an account, there's a big interview that happens. Even with online platforms, there's a big interview that happens. It's all done online, the questionnaire, but then a human being reads what you filled out. And then hedge funds, they can make money in rising or falling markets. It's one of the reasons they are so fantastic. Now, here is something that is so important, it gets its own line. Who takes the same positions that you take? Well, obviously, an online platform does, because it's your own investment. But avoid ignoring that for a moment. Only hedge funds. Brokers do not make more or less money when you make more or less money. They may make more money because you may give them more money if you do well, because they get more commissions when you go out there and you do more trading. But when you make or lose money, they don't make or lose money. Investment managers do not make more money or lose. They don't make money when you make money and lose money when you lose money. They just make money because they're managing your investments. So notice these are the only X's on the whole screen. To me, this is really important to understand. The only people who get the check marks here, and it's 2 check marks, are the hedge funds. That's the beauty of a hedge fund. They put their money truly where their mouth is, because they take the same positions they put you in. I'm going to say that again. When you give your money to a hedge fund, and make sure they're doing this for you. I know of one person who had their money with a hedge fund manager, but he was not putting that person's money into his hedge fund. He was just auto managing it like an investment manager. And this was not an interesting account. It didn't do that great. Okay. So we've done our investment type review, and we've looked at investment service providers. Let's look one more time at this. Let's look at customer type on the bottom. Review. If you're highly independent, you want to make your own investment decisions, you're not a techie, you don't want to go into online investing and learn how to run an online platform, just call your broker and tell them what to do. Okay? If you are highly independent and you think you'd love to be on an online platform and go into these online seminars and training sessions and go on YouTube and watch people trade and learn from them, get yourself an online platform. If you want a very thorough evaluation of your entire financial life, everything, before you start deciding what else to do, or if you're already doing lots of stuff but you want somebody to assess how you're managing it all, go to a financial planner, make sure they are a certified financial planner. If you are a dependent person, don't want to deal with any of this stuff in these first 3 columns, go to an investment manager. And if you are an accredited investor, meaning if you are an individual with $200,000 or more of income for 2 years, or a couple with $300,000 or more of income for the last 2 years, or if you have a net worth of $1 million or more, not including your primary residence, you are an accredited investor. You qualify. You can hand your money to a hedge fund, but the average hedge fund doesn't do great. The average hedge fund actually is not that great. If you're going to go to a hedge fund, go to a reputable hedge fund, because you are going to pay big fees. So you might as well go to the best. If you're paying for it, you deserve it. Let's look at online investment platforms. Finally, this is what I've been looking forward to. They are very convenient. They have confidential online application processes. It's very easy to get your money in there. You can do bill pay. Like however you normally pay your bills, you can put the name of that online platform in there, and it will find them in there, and you would just send money directly to them, just like you would when you pay a bill. like when you pay your electric bill. You can send them a wire transfer. You can send them a check. There are other ways. You can maybe even be able to do PayPal. Zero minimum balance. That's why there's an investment revolution, because for the first time ever, there are accounts that have zero minimum balance, and they don't charge fees. They don't charge a commission when you buy stock or sell stock. They don't charge a commission when you buy or sell ETFs. They have very small commissions for mutual funds, options, futures, very, very low commissions. So it's a whole new world now. In the past, just commissions would wipe you out. If you had, say, $1,000 or $2,000 to invest, by the time you made 10% from your portfolio, you were paying that in commissions. Now you're not. You can access this on a computer. Look at these phones here. You can access these online investment platforms on a phone app, and you can access them on a tablet. They are meta-functional. They are organically evolving. They are very customizable interfaces. Okay, and they can serve as, I think, all but one of the platforms that we're going to look at today. When you give them your money, you can use the account like a checking account, but be warned, some of them are not FDIC insured. Okay, and some are. So you want to look for that. Okay, now here is how I am going to do a side-by-side. I have done a side-by-side analysis of 9 platforms, and there's a company called stockbrokers.com who have just done their 10th review comparing online platforms. They looked at 15 of them. I reviewed 9 of those. We're going to peek at their website first and see the kind of work they did, which is just fantastic. And then we're going to go and look at my side-by-side, because they ranked them. They ranked the best online platforms, and I like their ranking. It fits what they've written. They are walking the walk, talking the talk. They're talking the talk and walking the walk. Based on what they've written, they've chosen winners, but I have a different view. And so my results are different from theirs. Not completely different, but somewhat different. And here we go. So we're going to look at some of their pages first, then we're going to look at what I did. And we're going to look at a bunch of screens so you can see what the platforms look like. Okay. So Mr. Blaine Rankensmeyer apparently runs stockbrokers.com. And let's read the green box. The stockbrokers.com Best Online Brokers 2020 review, the 10th annual review, took 5 months for them to complete, and they produced 30,000 words of research. Here's how they tested, and that's it. Here's how they tested will be all the screens, a bunch of screens we'll look at. But here's what they said, and I love what they said. Let's keep reading a little bit. Want to buy shares of stocks like Apple, blah, blah, blah? You'll need an online broker account. Choosing an online stockbroker is one of the most important decisions you will make as an investor. And I like that they call them online stockbrokers. That's fair. This guy aims to introduce online trading. And that's great, because they do. They give you a lot of explanation of what's in there. They don't just evaluate it, they explain it. I have spent a lot of hours over this last month going over this report that they've created, and you will see what I did. You will see the work that I ended up with, the product of that work, so that I could understand what they did, because this is my first exposure to these platforms. I traded on the world's most developed trading platform called Bloomberg, but that is not what this is. A Bloomberg workstation costs $1,600 a month, and it costs millions of dollars a year for an operation to have Bloomberg workstations. And when I worked in investment banking, that is what we used. These platforms are inspired directly by Bloomberg. They are 1% of what Bloomberg does, but they are 100% of what you need and more. Bloomberg has an amazing amount of functionality, but it is so broad. It is such a gigantic ocean. It is a galaxy that is beyond the scope of this episode. However, again, what they did that was fantastic is they saw what Bloomberg does so well, and they have given it to you for free. This is amazing. I really never imagined that I'd live to see it. Never occurred to me that you would have access to this, far less that you would have access to it for free. And you do now. Now, here's what we're going to do. We're going to only just look at categories of features of online platforms that stockbrokers.com looked at. And you're going to get a flavor for what they looked at. It's pages and pages of stuff. And then we're going to look at their results, their summary results. And then we're going to look at my pages and pages of stuff and see the way I've color-coded everything. And I've done something they didn't do. I've put all 9 of those I evaluated side by side on one spreadsheet. They have each of the vendors, each of the platforms on different pages. So what I did is I copied the stuff they had on all these different pages for 9 of them and combined them on one spreadsheet that I'm going to show you. This took many hours of work, and you will be able to tell. And that's not a complaint. I enjoyed every second of it because I want to learn this stuff. I am out here for you to learn, and I'm learning as I go as well. Okay, the first thing they looked at was commissions, and I'm proud of them because the first thing they mentioned is the first thing I've been mentioning. It is impressive that they have a minimum deposit on this account. This is the first example we will look at is TD Ameritrade, but don't worry about looking at many details here. I'm going to roughly walk you through what's here. But the kinds of commissions you have is a stock trade fee, meaning a commission. Stock trade fee is a commission. Look at that number, second line, $0. ETF trade fee, exchange traded fund trade fee, $0. Okay. For mutual funds, they charge in the range of $10 to $20 to get into a mutual fund, but it's $0 for ETFs. That's fantastic. And here they have no base options fee, no option base fee. They have a per contract fee of 65 cents for options. Very reasonable. And they've got other fees. We'll skip those for now. All right. They've got margin rates. Here's what margin rates mean in this context. If you borrow money and buy stock with that money, which they will let you do, because if you have an account and you have stocks in it already and cash in it already, that's your collateral. They will let you borrow money from them. They'll lend you money to a point, depending on what the contents are of your account. They will let you borrow the money to buy stocks, and this is what they'll charge you, between 8.25% and 10%. Right? Well, that's an important number to keep in mind. 8.25% to 10%. Okay. Average stocks only make 10%. If you were paying 10% to borrow money to buy stocks that only make 10%, does that seem like a wise thing to do? Borrow money to take all that risk when you're going to pay the same to borrow the money as you're going to make on the stock? That doesn't sound very practical, but no worries. Help is on the way. Anyway, more fees. Okay, there are many kinds of fees. Treasury trade fee. If you wanted to directly buy a treasury bond, which you probably don't, you can buy a mutual fund that'll do that, and you won't pay a fee if you do it through ETFs. And they have wire transfer fees. If you want a ticket, literally a stock certificate, they'll print one for you for $500. If you give your grandson a giant portfolio and you want him to have a stock certificate with a big number on it, he can put on his wall. Okay, you can buy one for $500. Anyway, offering of investments. This is literally the variety of investments you can buy. It is amazing. We already talked about investments in past shows, and today's bonus includes lots of investments categories. But here we go: stocks, fractional shares, meaning you can buy pieces of shares, and that's useful. Pink sheets and OTCBB and pink sheets are stocks that don't trade on listed exchanges like the New York Stock Exchange. They are just not listed, and you can buy and sell those through these platforms. Amazing. You can trade internationally. Amazing. Direct market routing. I'm on like 2, 4, 6th line. Amazing. You're being routed to some direct markets. They might charge a fee for that though. Options trading, complex options trading, going down. They give advisor service. Flying down, you can buy bonds. Flying down, you can buy certificates of deposit. Okay. Here we're still on we are still on offering of investments. Okay, municipal bonds, treasury bonds, DRIPs, mutual funds, futures, foreign exchange, just a huge variety of investments that you can make all over the world 24/7. You can be trading. You can knock yourself out. Okay. They have great customer service, these companies. And then they talk about the platform. So stockbrokers.com. Remember, this is a stockbrokers.com page we're looking at about TD Ameritrade. Or what was it about? Wait a minute. Was that right? Let's look at that. Yes. Okay. So now what they're looking at is platform. What does a platform have? Is it desktop or is it desktop Windows, desktop Mac? Is it on the web? In other words, will it be on your computer or on the web? Some have both, like they do. They have everything. TD Ameritrade. So you can trade on a Mac, you can trade on Windows, and you can trade on the internet on a browser. Okay. And they have all kinds of charting functions. The functions never end. We're going to get into that. We're going to see those on screens. They have all kinds of quote levels you can see. In other words, you're not only seeing bid and ask, but you're seeing several bids and asks at the same time. So you can see what's called depth of market. They have options chains that you can build online. They have option probability analysis, which shows you the chances you'll make or lose money with an option once you buy it. They have all kinds of features, options features, all kinds of charting features, quoting features. Let's see, next page. Okay, they have more options features. Short locator, meaning they help you find stocks you can short. Shorting means selling a stock before you bought it. Why would you do that? What if you could sell a stock for $100 without buying it, and then the next day buy it for 50 bucks? What if you could do that? Would you do that? Sure, you would. If you could borrow a share, sell it for 100, the next day buy it for 25. Unless the market went against you, then you couldn't. But some of the platforms do help you find stocks that you can short. You can't short all stocks. Basically, there are people who make their stocks available that they own to be shorted by others, and that means they can't sell them while somebody else has borrowed them to short them, and people are compensated for that. Right? And that means that if you short a stock, you're going to compensate the person who let you short their stocks. Small compensation, well worth it. All right, let's go down, streaming TV. Who has hotkeys? Who has a trade journal? Who has paper trading? Paper trading means you can trade, you can pretend trade, you can practice trade. And not everyone has that. And that is a huge issue. TD Ameritrade has it, but not everyone does. Who has watch lists? Way at the bottom here. Oh, let's go to the third from the bottom. Who has an artificial intelligence assistance bot? Yeah, they have AI in here. And that bot maybe can help you pick a portfolio. It's amazing. Okay. All right, research. Some of these guys have amazing amount of research on anything and everything you can imagine. And this is a list of all kinds of research that they give you access to, and in what categories of research. It is endless. Education as well. You can go on with whether it's directly through the platform or whether they give you free access outside of the platform, or whether they refer you to someone where you pay. You can get the equivalent of a graduate degree in education in this stuff if you want to go through a lot of platforms. It's endless, the amount of research available. Mobile trading means they evaluated what functions, because all the other functionality we talked about was on the platform if you're on your computer. But now they said, well, okay, they also have phone apps. How much functionality is in the phone apps? The phone apps have an amazing amount of functionality. They don't have all the functionality you have on a big giant computer screen. Of course not. They maybe have half the functionality, a third, but it's still amazing what you have. You certainly have on your phone way more power than you ever had before, like never before. Okay, so there are a lot of great features they have on the phone app. One of the greatest features, by the way, about phone apps is alerts. They can alert you. You can set up alerts, and if your portfolio goes way up, it'll alert you, and you can go in there and sell it, or if it goes way down, or if some event happens in the news related to some specific stock you're trailing that you're following, your phone can alert you. It can send you a text, or it can ding you, ring a little bell and let you know that you may want to go online and check what's going on. And these accounts can serve as banking accounts. So stockbrokers.com reviewed each of the features that are available. And again, it's important to be aware, like these guys, they are not a member of the FDIC. All right. So who did they pick for the best after all this time, after an hour and almost a half here of work? Who did stockbrokers.com pick as the best? TD Ameritrade. They picked Fidelity second. We're going to see why. They call TD Ameritrade best for overall and beginners. Fidelity best research. Charles Schwab best for retirement accounts. E-Trade best web platform. Beautiful looking web pages. We're going to see some of them. Interactive Brokers best for professionals. Okay, and I would say for best for professionals and best for persons who really want to learn fast and are willing to work, it is worth it. It pays off. It doesn't just pay off in terms of being able to make investment decisions. Their functionality and their price getting is fantastic on Interactive Brokers. It's great what they have. Merrill Edge, best rewards program. What that means is if you open an account, they give you a big chunk. If you open a big account, they can give you $600 right now. I don't remember the size, but I think it's on a future screen. I think it's like 25,000, but we'll see. TradeStation, apparently they've got the best technology. I'm not sure what they meant. So here is a review that we're not going to read through, but this is a sample of their writing. So now, if you want to learn more about TD Ameritrade, you want to get some takeaways, come back and look at this screen. Come back look at this video and freeze it right here and read what they have here. Here it is. Here's how stockbrokers.com summarized their results. They showed us the 15 names going down in rows. Who they evaluated? And then for every category we looked at, they gave them stars. And here's what you see: a lot of 5 stars and 4.5 stars toward the top, as you would expect, and far fewer stars toward the bottom. Right? Surprise, surprise. You're not surprised. So that's a summary. And they did have 3 great boxes that are very helpful and that will start showing you why I did not pick the same winners they picked. Okay. But here's something you can look at. If you want to see the top paragraph on TD Ameritrade and Fidelity, this is the same thing we just had up for TD Ameritrade. You can come back and freeze it here because Fidelity was number 2. If you want to look at Charles Schwab and E-Trade, freeze it here and read what they have to say. They are 3 and 4. If you want to look at Interactive Brokers and Merrill Edge, 5 and 6, freeze it here. And you can read what they have to say. All right. These 3 tables are great that they put up on stockbrokers.com. They have categories. Don't look at the middle columns. Look at the left column and the right column in this box. And on the left, they have categories. And on the right, they have who won in each category. Who has the best commissions and fees? Interactive Brokers. Okay, that's important. If you want to learn how to use their, and by the way, their platform is a lot like Bloomberg. By the way, you've seen Bloomberg screens probably, and I'll tell you how you can tell if you're looking at a Bloomberg screen. Bloomberg screens have a lot there. They have a stark black background, and they have a lot of stuff in yellow boxes or yellow text on black. So they have black text or white text on yellow, but especially black text on yellow boxes. Or they have yellow text on black, and they have extraordinarily high fidelity, really high def screens. Okay. Anyway, let's see who won. Commissions and fees, interactive brokers. Who had the best platform and tools? TD Ameritrade. Okay. Research, Fidelity. They said that earlier. Who had the best offering of investments? Who had the most kinds of investments that you could buy around the world? Interactive brokers. Who's got great customer service? TD Ameritrade. Mobile trading, E-Trade. They're the guys who've got a sharp-looking website and sharp-looking app. Education, TD Ameritrade. Ease of use, Robinhood. Robinhood, I noticed, has a lot of commercials on TV. So they've got something happening. They've got something going on. Who's easy to use? Yeah, Robinhood. You may want to look at that if you don't want to get into anything very complicated. Okay, here we go. Investor categories. Here's what they mean. Remember, I had investor categories, like you're very independent or you're not very independent. You're techie or you're not techie. They have investor categories, and then they recommended a platform based on your category. If you are a beginner, TD Ameritrade is fine. If you want to do options trading, do E-Trade screens. They are sharp for options. If you want to trade futures, which I only recommend if you want to take an immense amount of risk. You're intentionally, not that you're taking too much risk. Every time you use fire to cook, you're taking an immense amount of risk, but you know what you're doing. So if you know what you're doing trading futures, well, then get into Interactive Brokers and trade your heart out. If you know how to trade options, get in there and trade your heart out. If you're a very active trader, TradeStation apparently has stuff like maybe you can do algos. I'm not sure, but that sounds like it. Algorithms, meaning you can write programs, connect them to this program, and this program will run complex investment tactics that you have pre-programmed, but you don't know where the market's going to go. So you have created basically your own artificial intelligent investor, and this platform lets you run it through their platform. Okay, and that's impressive. Okay, so where were we? We were on TradeStation for active trading, professional trading, and interactive brokers. There you go. They keep coming up. Order execution, they're saying Fidelity, but I think interactive brokers may have them there because interactive brokers who I spoke with is plugged directly to the market. Look into it. If you're considering opening an account, try to see why Fidelity thinks try to see why stockbrokers.com thinks their order execution at Fidelity is better than interactive brokers. I don't know if I agree. IRA accounts, retirement stuff, Charles Schwab, they've said that before. Banking services, Merrill Edge, very impressive. Finally, who won awards? Who won awards for innovation and for international trading, which I notice international is misspelled, interactive brokers. So interactive brokers are impressive, aren't they? They keep popping up. Who has the best investor app? Fidelity. Who has the best trader app? TD Ameritrade. Best desktop platform? TD Ameritrade. Web platform? Power E-Trade. Very good. Platform technology? TradeStation. They feel like they're pretty powerful. Client dashboard? Fidelity. The dashboard is the one page that summarizes everything. When you first open it up and you see your dashboard, it summarizes everything going on in your account, gets you right up to speed on what's going on with your own account. That's your dashboard. Okay. Trader community. That's great. TD Ameritrade. Maybe they have a great blog. I'm not sure. Who has a lot of new tools? Charles Schwab. Okay. Oh, research beta. Okay, good. They're using the expression beta. Maybe they know what they're doing with it. We talk about beta a lot on this show. Okay. ESG investing means environmental, social, and governance investing, meaning green investing and other kinds of activist investing. So what's going on is this. Stocks are issued by corporations. These corporations are being evaluated for how ESG they are, for how green they are, how socially conscious they are, what good governance they may have. An example of good governance would be they have lots of women on their board, or they have lots of independent names on their board, so that their CEO doesn't dominate the board of directors and overly dominate the company. And who gives you the best overall client experience? They say Merrill Edge. That's impressive. They didn't say I thought they would give it to TD Ameritrade, but they didn't. Okay. So what do the screens look like? Interactive Brokers login screen has the normal thing you're used to, username and password, but they also have extra authentication. They'll send you a code number. They'll text your code number, and then you'll use that to get in. Excuse me, dripping coffee all over myself. Here's what it looks like when you first get into Interactive Brokers. It's a set of screens, a set of windows that we're going to go over, and you can have a live stream going, so you can keep track of the news happening live on the markets, and you pay a little extra if you want real-time pricing. Well worth it if you're an active investor. All right. Now we're going to look at some features on the screen. There's your ticker that you've selected in that white box, QID in this case. And the order window is that window right below where it says order window on the top left. So the selected ticker is in the order window. And the order window, you may see that between the selected ticker box, between this white box and that white box, between those two, go down a little and you'll see bid ask. Bid on one side, ask on the other. And that shows you that people are offering to buy for $20, but the ask was $20.01, which shows you only 1 penny of difference for this QID investment. And that's a chart of where the price has been going. So since it's been falling, what is it? Is it time to sell? Because you maybe held it and you've been trying to sell it, or is it time to buy it? Because maybe you don't have any and you want to buy some of this. Chart window, there it is. Scanner window, you can set up scanners that select names of companies and track information about them. There's your orders placed, filled, and saved window on the left. And then on the right is news headlines that you can modify. Here is the scanner builder window. So you had a scanner window on the right, and you get to filter it with all kinds of things that are in this dialog, this great dialog in the middle. Lets you choose what country you want to watch. And they have many preset scans, and then you can create your own scans. So you can say only stocks whose name starts with an A, or only stocks whose market capitalization is at least $500 million, or whatever you may think. The stocks that went down the most today, you can do that. The stocks that went up the most today or yesterday, on and on and on. So you can set up your scanner, and you can use presets again, or you can use your own. And the scanner determines what tickers are in that window, and everything has a ticker. So you can have all kinds of things in that one window: stocks, futures, options, ETFs, mutual funds. Okay. Here is, it's kind of hard to see. It might not be that, this might not be a very good slide, but on the top left, there's a window highlighted in blue, and it's the daily lineup. They call it Interactive Brokers Daily Lineup. So that's typical. You go in here and they have a daily setup screen that may or may not have stuff about your own portfolio. Maybe it's just to get you lined up on what's going on in the market. That's what that does. So this one has international. It's got a general briefing. It's got analyst upgrades and downgrades of stocks, because stock analysts have these ratings like buy, hold, sell, And so upgrade would be you were a hold, but now you're a buy. A downgrade would be you were a buy, but now you're a sell, that kind of thing. Okay, pending economic reports. Let's go back to that window. Pending economic reports is important because the market moves a lot if there are surprises. There are always forecasts for every kind of economic number that gets reported. I don't mean nearly always. I mean always. All of the many, many dozens, actually hundreds of economic and business indexes or items that are tracked have forecasts attached to them. And then you look at whether the real actual numbers say that was forecast for unemployment came true or not. And if unemployment looks a lot worse, a lot more people are unemployed, maybe the market will tank. Or if a lot more people are making money because the unemployment's going down, maybe the market will rally. That's important stuff to know. That's why an economic report is very important. Okay, companies, there goes. This is a window that has an earnings calendar, which is important because when companies report earnings, same thing. If they have a positive surprise, stocks rally. If they have a negative surprise, stocks drop. Top 10 stories about your own portfolio. You can have all of that in there. And here's another screen. A little more detail. Once again, same kind of screen, same screen really, but a little more about ordering. You get to enter the buy or sell on that buy or sell button right there, right below the white letters there, buy sell button, and the bid ask price is up above, and you can tell them what quantity you want to buy or sell, and you can tell them if the duration of the order is it a day order that ends at the end of today at midnight, or is it a good till canceled order? Anyway, some orders, for example, end when another order gets filled. You can connect them, and they'll do that. So if you're deciding, well, I'm going to buy either Sears or Ford, but you want to cancel one order if you fill the other one, you can tell it that, and it'll do it. Isn't that fantastic? And then there's a submit button. So one step is to create an order. You can even save an order without submitting it, but once you submit that order, you're in the market, and you get filled so fast. Be careful. Make sure you know what you're doing, because you will hit that button and you'll be filled just almost by the time you let go of the button when you tap the button. And then there are settings for these windows. And if you hit the settings window, then you get this. This is what you would see after you click the settings gear on the previous order window. And there are all kinds of orders that you can set up based on the averages lately of the stock price, or based on many, many other factors. Okay. Here is an automated portfolio manager. I just wanted you to see that it exists. That's a backtest window, meaning you can go in and pretend you're buying the portfolio, and you can do backtest and see how that portfolio would have behaved for the last week, month, year, 5 years, whatever you want. And the position list shows what's in that portfolio. And this is a filter window where you build a portfolio. If you want to take more risk, it'll put more risky stuff in there. If you want to take less risk, it'll move it out for you. And then the chart below with all the little bars shows you what your expected return is and how risky you are. If the bars are very spread out and flat, you are taking a lot more risk. If the bars are more crowded toward the middle and tall in the middle, you're taking a lot less risk. Here is TD Ameritrade, no longer interactive broker screens. And look at this. We can look at 6 price screens at the same time. Look at this screener. It has a bunch of cool coding in it. On the left, you see the little bubbles, blue bubbles, red bubbles, yellow bubbles. Those are calendar events. So it has stuff like, it tells you when they're going to release dividend information. We've gone over an hour and a half. And we're near the end here. We're not going to do the bonus. We're just going to get through the screens. So there it is. There's just an example: screens, price screens, option price screens, big filter, event calendar, different. This is Charles Schwab's, different look, different feel. Okay, E-Trade. They're the guys with the slick look. Okay, they're the guys with the really pretty screens. And here's my evaluation. We're really going to start flying now. We'll be done in 5 minutes. We've gone a long time. We've done a lot of work today. Okay, here's what I did. If you see a green flag, then that's great news. If you see a red flag, pinkish, then that's not good news. So what I did is I took every single feature that we saw in the TD Ameritrade study, and I put them on a spreadsheet, copy pasted them, and then I went to these 9 names, and side by side I put down what they had in each feature and put them side by side. And if somebody had something good compared with the competitors, it was green. If they were poor compared with competitors, it was red, highlighted in red. So now you can get a flavor for who's stronger by seeing they have a lot of green. And look who has a lot of green. Look, you get to see who won the race too. On the left is the winner, TD Ameritrade. Let's look at the names. Number 2, Interactive Brokers. Number 3, Fidelity. Number 4, E-Trade. Number 5, Charles Schwab. And I'm going to say this, though. Between the first 5 names, it is a close call. They're all great, except in one regard. If you think you want to do margin trading, you want to borrow money to buy stocks, which many people do, you want Interactive Brokers. There is no question. Because if we look at margin rates, they charge 1/3. And why do they get away with that? Because they don't have a bunch of brokers. Interactive Brokers doesn't have almost any brokers. Here's what they have: programmers. They are the only one of these parties who from the day they got into business, it was all about an online platform. So they have thousands of programmers and mathematicians and Wall Streeters who are building this platform, making it better every day. And they don't have the giant overhead that you carry when you have brokers. So right there, Some people, a pro trader would put them in first place, would not put them in second place. But for the sake of this show, I put them in second place. I think TD Ameritrade is amazing. They deserve a lot of credit. Now, that's it. We're only going to look at categories and color shades. We're near the end. So in trade commissions, let's start with the top box. No one's completely dominantly better except maybe Interactive Brokers, right? We knew that. They had cheaper pricing, so they got more green boxes. Margin rates, Interactive Brokers beat the pants off everyone. Miscellaneous fees, more green boxes on the left, meaning good pricing, more pink boxes on the right, meaning terrible pricing. That's what we would expect to see. Offering of investments, you're going to see a lot more green on the left, especially Interactive Brokers. You're going to see a lot more pink on the right. Okay, and then later on, what you want to do, if you're interested, is look at each of these screens. You can freeze this video and look at these screens, and this is the only place I've seen this done, where all of these features are shown side by side, and this set of screens I'm showing you has every feature that stockbrokers.com used to evaluate. Okay, let's go back to that last one. Some green on the left, lots of red on the right. By the way, I highlighted some in yellow on the left that I was very focused on, that I cared about a lot. Lots of red on the right, not much green on the left in research, because when everyone's even, when everybody has the same thing, I don't give green. If you see the same color like that, you get gray or white, that means they're doing great, basically. Everyone's doing very well. Okay, lots more red on the right for education. Education on the left is amazing for some of these guys. Look at TD Ameritrade in yellow. I have highlighted. They have 500 webinars. So you can just learn so much online through these guys. Mobile trading means how much can you do when you trade on your phone. And you'll see TD Ameritrade's impressive. You'll see some green there. Okay, banking. Who's got the best banking? Looks like Fidelity has the best banking. I think they mentioned that too. But they're not a member of the FDIC, whereas Interactive Brokers is, E-Trade is, Charles Schwab is. That's the top line here. Member of the FDIC, Federal Deposit Insurance Corporation. That means a bank would be paying insurance, and they will cover you up to $250,000 per account. Okay? All right, you can come back and look at these screens, and this is it. This is my end of my show because this is my summary. TD Ameritrade got 14 green flags, and each of the yellow ones here counts for 5 green flags. So TD Ameritrade got flags for paper for practice trading, 5 flags, 5 green flags. Whoever had a good screener got 5 green flags for ETFs, and whoever. So I'm looking at the categories in the left column. Okay. Who got green flags again? Stockbrokers.com got 14. Excuse me. TD Ameritrade got 14. Interactive Brokers got 17. Oh, by the way, let's go back up. Let's do a Leonard Susskind. I hope I've got his name right, by the way. It's possible I've messed up the professor's name, but I think that's right. Anyway, notice something. TD Ameritrade did win. TD Ameritrade did win. Stockbrokers.com, #1 rank. Interactive Brokers won. Barron's, #1 rank. We didn't talk about that here. We didn't go over Barron's evaluation. Barron's evaluation was late last year. Stockbrokers.com came out in February 9th, I think it was. That's right, because on February 10th was my show, which was amazing. I got lucky there. All right, another comment. Let's keep going to the right with the red letters right under the names. And note that E-Trade is being bought by Morgan Stanley, and Charles Schwab is being bought by TD Ameritrade. No, I said it backwards. Charles Schwab is buying TD Ameritrade. Okay. So that's important to know. All right, back to the flags though here. Green flags are on top, and green flags is those number of boxes that were colored in green. Yellow flags here are green flags above, but that I'm counting for 5. So each time you had a yellow flag, it's that you had a green flag, but I'm giving you credit for 5 green flags for that because it's so important. And so TD Ameritrade had 2 of those. They had one because they had paper trading, and they had a screener for ETFs. They don't have low margin rate. Only Interactive Brokers has that. So anyway, red flags, and I'm only going to go over TD Ameritrade and Interactive Brokers on this screen for the moment. Interactive Brokers had more red flags, but I'll tell you what it was. It was the hand-holding stuff. They didn't have lots of the real helpy stuff, the real hold your hand stuff that TD Ameritrade did. And so I dinged Interactive Brokers for that. Nevertheless, TD Ameritrade and Interactive Brokers net flags was 14 for TD Ameritrade, 11 for Interactive Brokers. Here's what I did. I added green flags plus 5 times each yellow flag, and then I subtracted red flags. And that's how I got net flags. A little bit more. We're nearly done. What was negative about TD Ameritrade? No interest. They don't pay you interest on your cash that's in the account. Most people do pay at least a tiny bit of interest on that. Maybe that's not that important, though, compared with all the other stuff that is involved in all of this. Interactive brokers, no 24/7 support. That was then. And they might have it now. They did have long hour support, but they didn't have 24/7. I'm not sure what they have at this moment as I speak. Superlative. Only these two on the left got superlatives from me on this page, because they both have foreign currency trading. No one else had that. So if you think you want foreign currency trading, that's superlative. And let's look at TD Ameritrade only for a second. They have Facebook access, which is fantastic. 500 webinars we mentioned is fantastic, and ease of use is impressive. Interactive Brokers has foreign currency trading, tremendous low margin rates. We went over that. Tight pricing means if you buy, you're going to buy at a great price. Interactive Brokers connects you more directly to markets than anyone else, from everything I know, including the fact that I called them and they explained this to me. And I trust that when they were pitching themselves, that they were being candid. I don't think they were overselling themselves at all. And by the way, I've spoken to other professionals around the world in the last few weeks about what's going on with online, and they call Interactive Brokers a monster. Several people immediately, when I said Interactive Brokers, said those guys are a monster. So very important name in this world. Tight pricing, and they are #1 in innovation. Isn't that impressive? Okay, well, there it is. Oh, everybody has these wonderful training, these wonderful resources, training, and you can get trained also not through them. You can get trained through them or not through them, because you can get trained on Investopedia. Investopedia.com has an academy, and you pay a fee, and you can go attend physical seminars they have. So that's it. I will not get into the bonus because we have worked way, way hard. Okay, very, very hard. We've been on for a long time. So thanks for hanging out with me. I hope you learned a lot. And remember, you can always stop at any time when you're watching. You can come back and review stuff. This is Al Mora, host of the Get MorAlpha Show, who hopes to recruit as many people as I can to the online investing revolution, so that we can democratize investing, and so that instead of hedge funds being the kings of investing, everyday people can be the kings of investing. So that instead of them swinging the market around so that it works for them, because some of these people will come on the news and who knows what they'll say to make the market move in their favor. Instead of they controlling the market, how about if we get in that market and we bring the weight of our knowledge into that market, whether it's simply that we're there and that we're making common sense and we're not letting the market swing around like crazy. Let's make that market work for us. Let's be capitalists in the good sense, smart capitalists. Let's be investors. Capitalism is a powerful thing. Yes, capitalism completely unbridled will have problems, but so will anything. You name me any institution, any process, any government that won't have some corruption. Capitalism has some corruption. It has some unbalance. But here's the way I look at capitalism. This is why I'm a political moderate. I'm in the middle, meaning I'm very strong for capitalism. Let's say you have two societies. One is communist and one is capitalist. Let's say in that communist society, they split everything equally. I respect that sentiment. That's why I'm in the middle politically, because I respect the fact that some people want a world that looks fair, that is fair, where people more or less have the same amount, or at least within a range that looks reasonable, right? Whereas on the other hand, you can have another society. So that would be a communist or socialist society. Let's not go extreme. On the other side, let's say we have a capitalist society. Let's say we have far less balance of income, right? However, let's say also that in that society, far, far, far more people have a middle-class life. And that in that socialist or communist society, far fewer people are as high as middle class. They're lower middle class or lower than that, right? Then which would you prefer? Yes, we have more unevenness in capitalism, more unbalance, right? But if way more people are still living a better quality of life, why not go for capitalism? By the way, have you noticed something? Capitalism beats the pants off of socialism and communism. What happened in Germany? They split it in half. One part was communist, the other part was capitalist. These are the same people, the German people, right? This is a unique experiment that got made in history. And what happened to the economies? The factories in Germany were falling apart, rusting to the ground under communism. And Gorbachev saw that Clinton was going to have, the US was going to have a computer in front of every kid in every school in the country when they knew they could never touch that. They didn't have the resources to do that in Russia, one of the most powerful, successful communist countries in history, and it collapsed in under its own weight. And do you think it wasn't corrupt? And by the way, do you think that their income actually was as fairly distributed as they said they want to make it? Don't you ever believe it. Don't you ever believe it, because they're human beings like we're human beings. And what are they going to do? Are they not going to help their friends? Those that are in leadership, are they not going to help their brother and their sister and their cousins and the kids they went to school with and they grew up with? Are they not going to help that general crop of people who've already been in leadership forever in Europe, who've been there for centuries? They're going to end up ruling a socialist or communist country. In capitalism, is where it's more dynamic and you have more movement from lower to upper class or middle class. That is stifled, that has slowed down recently in the United States. But let's not get carried away and become too socialist. Let's find our balance. Let's not swing too hard left or too hard right. Let's take the best ideas from both sides. Let's listen to each other respectfully. Let's give each other a break when we're not as polite as we wish we could be. Let's give each other a break when we over politicize, because as much political tension as we have now, this is nothing. Let me remind you of one thing. I'm on a roll, and I'm going to say this, and I'm going to get on these rolls in this show, because this all connects to investing. This is not World War II. Even coronavirus is not World War II. 60 million people died in about 60 months. 1 million people per 30 days were dying during World War II. So humanity has gone through storms that make this look like not such a bad storm at all. Okay, so remember that. That is it. I am going to get back on my full screen. I wish I'd been fired up on full screen. Thanks if you've come and you've hung out. I know this is a very long show, and by now maybe nobody watched, and maybe nobody's going to watch it to the end. But I can say this: it feels great to get my ideas out there to you. It feels great to get things off my chest that I'm thinking about. I'm working on a novel that has many of these ideas in it. Ideas about science and ideas about history, politics. I love sports. I love movies, culture, art, certainly music. My gosh, those of you who know me know how much I love music. And so I will be enjoying coming to you mainly about investing, but there will be a bunch of other fun segments I'm planning to do. I'm lining up an interview subject, and I found somebody. They've agreed to come on. It's a question of scheduling. They're going to be in town soon, and then I'll get them right here in MorAlpha Studios. So this is Al Mora finally saying goodbye, and I'll see you next time. I hope. By the way, please be safe. Please be careful. My thoughts are with you, your family, those of you who are healthy, and those of you who are not. Here's something, by the way, I must say this also about coronavirus. Here's what I want to make sure I get through to everyone, and I think you'll probably agree. I agree that we should do everything we can for our seniors and people who have pre-existing conditions, whatever we call that. I'm not a medical professional, but I do not agree that we should take any comfort in that and start being lax and taking care of everyone down to children. People keep talking about it as if, we don't need to focus as much on taking care of children. Wrong. Let's put all the energy that we put into taking care of any senior at any phase of their life into taking care of ourselves, each other, and our children. Take care of yourself. Eat healthy. Exercise. Smoke less. Drink moderately. Be careful. Take great care of yourself. I want to see you healthy. I want to see you out there smiling. And I want to see all of us resume our normal, wonderful, incredible American lives that we have here in America and around the world, that we may all have the best lives that we possibly can, with freedom, with entertainment, freedom of movement, and with great futures for our youth and our children. All right. Now I got that off my chest. I'll see you soon. I'll be back on the air 6 o'clock on Monday. And then when I schedule more, I'll let you know. I'll make announcements. Al Mora, host of the Get MorAlpha Show. Another episode done, and I'm very pleased. What a series we've got going.